Okay, welcome to our final classroom session for Public Administration 509 Applied Political Economy. I just want to compliment everybody again on the presentations that y'all made last week. And I just want to tell everybody that y'all done a good job overall in this class, and I look forward to this last session. Like I said, it shouldn't take more than 45 minutes to an hour. There's a couple of things I just want to go over with you. There's one new topic that I haven't discussed because it really wasn't part of the class reading. And as I was looking back at the syllabus, I realized that I needed to cover it to make sure that you were aware of it and offer some thoughts on it. And then we'll talk about what the exam will cover, and then we will go from there. So what tonight we're going to do in class is I'm going to spend a brief amount of time talking about the important topic of cost-benefit analysis. I'm going to talk about, some thoughts that you should have about it. It is something that is often associated with political economy because in economics and in financial management, you do cost-benefit analysis in a pretty objective, numeric way. And when we look at, as we think about what we've studied in this course so far this semester, what we realize is it's a little more complicated than that. And so I kind of want to provide a little more open-ended assessment of what cost-benefit analysis means. And in reality, what y'all have been doing throughout the course this semester is a form of cost-benefit analysis. So I don't want you to just think that this is somehow separate from what y'all have already been doing. And then last, I just want to talk about the main topics that will be the focus of the final exam, which y'all will receive. You will receive the exam assignment tomorrow morning by email, and you will have until next Thursday to complete it, next Thursday at 8:45 p.m. local time, Eastern time. Are there any questions? Okay. So let's talk about cost-benefit analysis. So when cost-benefit analysis was originally developed and has been applied, it has a tendency to look at whatever it is trying to evaluate, whether it be policy or project, which in itself is a type of policy, or any type of action in very concrete, easy to decipher and evaluate terms. And if you look at the most basic type of cost-benefit analysis, which could be, for example, the difference between buying and renting a home, or buying a car and using public transportation, or whatever the case may be, it's often the idea when those concepts are presented is that these are going to be managed purely from a fiscal perspective. The idea is to take whatever the various costs and benefits are and be able to evaluate them from a financial perspective, apply a financial value to them. And so obviously that ties into economics. This is really where cost-benefit analysis, is still sought by a lot of people. And that's especially true in the private sector. When the private sector does cost-benefit analysis, particularly when you're looking at investment, they're looking at return. They're really looking at the ROI, the return on investment. And obviously, because they make the investment in currency or in dollars or an asset or in certain kind of investment that they make, whether it's cash they have or they go out and finance, they're looking for a return in kind. They're looking for a return in like kind. They're looking for, if they're going to invest $100,000, they hope to double that investment. They hope to get $200,000 or whatever the case may be. And so when they're looking at programs, projects, new services, new products, they want to do the analysis to determine from a monetary perspective, if I'm going to put so much money in it, am I going to receive a return directly in the form of benefits that's going to be greater than and exceed those costs? And so when that model started to be applied to the public sector, it kind of created this way of thinking that obviously we should be looking at return on investment and we should be trying to figure out how it's done monetarily. And so For some programs, when you read what think tanks do, particularly more right-leaning think tanks, they have a tendency to look at it from a purely fiscal perspective or a monetary perspective. They look at an investment that's being made in a particular government program or a particular public project, and they try to incorporate all the various costs, or which can take on many different forms, and it's important to understand those costs. It's important to figure out what all the costs are, and you have direct and indirect costs. You have those costs which are direct. They're directly related to what's going on that you're going to directly incur. And then there's the potential for indirect costs, and that can even be tied to negative externalities. And understanding what potentially those negative externalities are. And then there's understanding the benefits, understanding where the value is created from the investment. And so, for example, for example, when we built the event center in Rocky Mount, we did a cost benefit analysis. And we had to look at it from two different perspectives. One perspective was purely the operational costs and the operational revenues of the facility. And what we realized, first of all, was we knew that for a facility like this, we would need to raise taxes to accommodate the debt cost associated with building the facility in the first place. So our goal was not to recover those funds through operating revenue. The idea was we would raise taxes, or we would have a dedicated government funding source, general government funding source, to be able to cover those debt costs. And we have that. But the idea that we developed is to have a business case where we could show that after a certain number of years, in our case, 5 years of full operation, not anticipating something like COVID happening while we were in the second year of operation, that we could achieve a situation where the direct revenues or the direct benefits received from the facility, i.e. the revenue that the facility was generating itself through ticket sales, rentals, concessions, catering, whatever the case may be, would be sufficient to cover the operating cost. Again, debt taken out of the equation. And that was our goal. And you structure this in a financial statement that's known as a pro forma. This is something that businesses do. It's typically a 3 to 5 year projection of where they anticipate operating costs to go. In the private sector, in many cases, you start building in what those debt costs are going to be, because you also want to recover those. So that's the most basic, the most fundamental type of cost benefit analysis. Well, then for us, we also saw that this project was an economic development engine, and that there was the potential for additional indirect benefits in the form of economic activity that a facility of this would generate, potentially sales tax revenue from people going to restaurants, hotel revenue from people coming from multi-day tournaments, which is primarily what we have at this facility, whatever the case may be. And so you start assessing what the economic impact is. And that is a little more complicated. There's various calculations and methodologies for doing it, with the understanding that these benefits do not tie directly to the facility, but are heavily influenced by the existence of the facility facilitating business into your area. So for example, we calculate this on a pretty regular basis. And what we found, we've had 13 weeks of events at the event center, and we've already achieved an economic impact of about $9 million. We've had over 50,000 people visit the event center, mostly for sports tournaments that involve multi-night hotel stays, which include restaurant visits, other types of consumer activity. And so we've done this, and as a result, we have this indirect benefit that we're also able to factor into the equation and show as a benefit to community overall. It has the potential to lead to new business coming to Rocky Mount or to another community that has such a facility. It has the potential to add hotels, which increases capital investment, which increases property taxes. As you can see, it kind of deviates from there and can expand into a variety of ways. Another example that you can use the cost benefit analysis in public policy, which is more monetary, is when you look at housing investment. Now, many years ago, decades ago, here in North Carolina, local governments really didn't do a lot with housing. There was federal programs that were, of course, established in the 60s. And so those programs were there, but for the most part, what cities and counties have started doing to address housing, particularly housing affordability, is really something that's come about for the last 10 to 20 years. And it's pretty sizable what they're doing now. We've been doing it for about the same amount of time. And in our case, when we look at housing, what we're mainly looking at is how to resurrect or restore housing stock that has fallen into disrepair or decline or unuse, and as such is lower tax value and is not available for occupancy. Based on the most recent analysis, we need about 1,700 affordable workforce units in our community. We're about 1,700 units of housing short. And so what we see is that we see a lot of inventory that's sitting on the sidelines. And so what we're trying to do now is figure out, well, how do we get that inventory back up? And of course, this is not a very inexpensive proposition. It's done through a variety of incentive programs and grant programs that usually involve helping to facilitate and incentivize private investment in these areas, similar to what Raleigh's doing, similar to what Chapel Hill and Durham are doing. And you want to find some ways to show a return on investment. Well, from a monetary perspective, the ways you have that is you have the ability to show that if you take an existing property that may have a dilapidated house on it, where if a property value of, let's say, $25,000, and whether you restore the house to a modern condition or you tear down the house and build a new one on it, you could potentially have a home that's a property that's now valued $125,000, $150,000. You have sizable increase in the property tax collections on that given house. You also have the potential benefit, depending on how improving a neighborhood addresses other social needs that require costs like crime or public safety or other factors, infrastructure utilization. You have the ability to show benefits to the reduction in cost in other areas. So those are pretty basic, straightforward ways of calculating cost and benefits with respect to public policy. The real challenge has come in the fact that not everything can be monetarily valued. It's hard to put a monetary value on quality of life. It's hard to put a monetary value on safety. It's hard to put a monetary value on equity itself. These are not things to easily quantify from a numeric perspective. And so as you do cost and benefit analysis in public policy, you kind of have to expand the spectrum. Certainly from a cost standpoint, you have the potential for negative externalities and unintended consequences, which can reduce benefits or increase cost in other areas. From a benefit perspective, you have the potential of improving certain conditions or certain circumstances that may not necessarily result in a monetary gain or a cost reduction, but certainly are to the benefit of the citizens and taxpayers that you're serving. And the challenge that you have when looking at understanding these costs and benefits is in figuring out how to compare and differentiate between them. So as you move forward in doing cost benefit analysis, and I cover this more in the policy analysis class, but I do feel like it's important to cover here as well, there is a need to really understand that it's a very broad concept. And that simply because somebody asks you for a cost benefit analysis, it's really important to understand what kind of analysis they want. For example, I was doing some work for a senator's office, a U.S. senator's office today, and in their request about a project that we're proposing to them for federal funding, they asked, "Give us a cost benefit analysis." Well, this is the kind of project where I can't make a financial determination on what the return on investment is going to be. So I have to explain it in non-financial terms, non-numeric terms. And I have to show that it's not only really a quantitative benefit, it's more of a qualitative benefit for the people in our community. So it can be a challenge. It definitely shows differences in political philosophy, differences in approach. None of them are necessarily bad. It's just the fact that it's kind of become one of those concepts that people have different thoughts about. And as a person working in public administration, you kind of have to, first of all, understand what they're actually looking for, and two, figure out, based on what they ask for, based on how you can really show and emphasize what they are. It's important in the development of policy that these analyses be done objectively. you really need to commit yourself. All of us need to commit ourselves to making sure that we do objective analysis, that we're not just simply doing analysis to try to prove that the program is right. That can certainly is good. That can certainly be the hypothesis, but we have to be committed to being open to the results of the scientific method. We have to let the outcomes or the results speak for themselves. And that can be a challenge in and of itself. That's only human and natural for us to sometimes disagree when somebody or something that we do tells us that what we're thinking of is not a good idea. But it still does not ignore the fact that we still have a responsibility to understand and recognize what the analysis says and move forward with it. So that's what I wanted to share with respect to cost benefit analysis. I realize that in the past, it's probably been given a lot more attention than it was this time, but that's because I think that there are many other topics. And some of these, of course, deal directly with cost and benefits. You can look at aspects of equity or coordination or commitment as cost and benefits of given policy as well, even though they may not necessarily be monetary in their nature. So are there any questions with respect to this or any other thoughts anybody would like to share with respect to cost benefit analysis? Okay. So let's talk about the final example. So in the final, it really comes back to much of what we talked about and what you did in the group project. If there are any concepts that I really think are important to your understanding of policy, and particularly the understanding of political economy, it really comes down to these 5. And they're in no particular order, but I did write them down as I was remembering them. First and foremost, we have the issue of equity and understanding horizontal equity and vertical equity. I think those are very important to understand. And when it comes to policy, it's very important to understand those. Obviously, the discussion of equity overall is far more prevalent in our evaluation of policy and analysis of policy than perhaps it was 20 years ago, and certainly long before that. And so what we have to do is we really have to think about this, and we need to think about it both from the horizontal and vertical perspectives. When it comes to potential problems and strategies, and when it comes to policy, we have to look at coordination and commitment. And there's the examples that I will use in the final, along with dealing with equity, also deal with coordination and commitment, because a lot of times when we're looking and evaluating past policy that has not worked, and the examples in the book, in the text, were really key in on this, we see that a lot of the problems and a lot of the reasons why that these policies didn't work had to do a lot of times with coordination and commitment. We also need to understand externalities. I'm a firm believer that to truly understand a policy and to understand its potential and to understand its actual impact, you really have to hone in on what the externalities are, the unintended consequences. Sometimes they can be positive. There are certainly many examples of that. And many times they're not. And it doesn't mean necessarily that a policy can't move forward. It just means that there has to be a readiness and a willingness and a preparation to address what those externalities are. That cannot be ignored. It simply can't be said as, to make a good omelet, you got to break a couple of eggs. It doesn't work that way. And so it's important for us to be able to, as we move forward, do our best to try to predict what maybe some of these externalities are going to be. And also to, once these externalities occur, to have solutions ready and do our best to mitigate their negative impact. That is certainly something that we have to take into consideration. These are the topics that I'm really going to focus on. So if you want to take a look back at the lectures that have covered these topics, I would also encourage you to go back to the reading or also look at the additional supplemental material that was provided to really understand what is out there with respect to these key topics that we will cover. And I expect to see your progress in understanding them in further detail in the results that you provide from the final exam. Are there any questions with respect to these topics? I'll cover I'll talk a little bit more about the examiner in specific here in a second, but I wanted to know, are there any particular questions with respect to these topics? Okay.
Sorry, Professor.
Jessica, do you have something?
Yeah. Well, I didn't want to jump the gun because I didn't know if you were going to talk about this already. Just the format of how we were, and I know last class, I think you mentioned something of doing it in a memo format.
Okay. So so the exam itself will be distributed by email tomorrow, April 22nd. It'll be well explained, so I expect everybody to follow the instructions based on how to do the exam assignments as well as how to submit your responses. The way the exam will work is that I will lay out some particular areas of policy or particular policies that I want you to evaluate. I will ask you to I will tell you what I expect for you to evaluate them on, and then give me conclusions or recommendations or thoughts with respect to the policy that's being discussed in total. These will be in the form of memos. You will use the memo template that you used for the reading assignment. I'll also make sure that memo template is available when I send out the email. And they are to be no longer than both of them. You submit them separately in the same email, but neither should be longer than 3 pages in length. And by what I mean by that is, if you write more than 3 pages, I won't read past 3 pages. So that's just to keep in mind. As with my exams, they are open note, open book. You know, go back and watch the lectures if you want. This is really about your understanding of the concepts and being able to apply what you learn in the course of the reading in this class to being able to do the work that would be expected of you in the policy area in the public administration spectrum. So that is the assignment overall. Are there any questions with respect to what the final exam is going to be, other than what I can't tell you because I haven't sent it out yet? Okay. Well, I just want to conclude by saying that this has been a great semester. I hope that everybody has gotten a lot out of it and gotten a chance to really learn some about these fundamental concepts and how they apply to the work that you'll be doing professionally, the work that you have been doing. I thank you all for your time and attention. I wish you the best of luck on your final. And with that, I bid y'all farewell, and thank you very much. And this concludes this class. Thank you.
Thank you very much.
Thank you. It was a lot of fun.
Thank you.